Welcome back to the channel. My name is Steven. I'm a pharmacist and I own 52 units of real estate. So today was pretty bumming for me. I was trying to convert my 26 unit apartment complex insurance, which is replacement cost or RCV for short, and the premium is through Travelers and it's $30,000 a year. So every year for the past 2 years, my RCV insurance has gone up by $5,000. So it was 20,000, 25,000, now 30,000, and it's due to the age of the property, right? The property's getting older. It's in Oklahoma, so there's risk of wind and hail, right? Tornadoes and hail. It's in the Midwest, and the replacement cost goes up every year because it gets more and more expensive in terms of labor, in terms of materials, right? So all those factors typically means your insurance is going up, right? I have a C-class asset. It's built in 1970s, so it's older property. I renovated the inside, but the infrastructure is going to be older, right? So I was shopping for quotes to get actual cash value insurance. I have a whole video comparing about replacement costs, RCV versus ACV, so check that out. I don't want to go into too much detail in this video, but actual cash value insurance is basically cheaper because it doesn't give you the money to rebuild your apartment complex if it burns down. It just gives you enough money to cover your loan, to recoup your expenses, clean the land, and then sell the land, and then move your money elsewhere, right? So I determined that, you know what, if this 26 unit burned to the ground, I don't want to rebuild it. I don't want to deal with the headache of that. So let me go to ACV insurance. So I reached out to this um, local Oklahoma insurance company, and he gave me a great quote. Right, it was like $9,000, which was $21,000 savings. That was huge, right? I can save $21,000 a year in insurance, which would, assuming a 10 cap, increase my net operating income by 21,000, and assuming a 10 cap, that's going to increase the value of my asset by 210K, right? But when I got this insurance, I binded the policy. They typically ask for a 3-year loss runs report, so they want to see if you have any claims on the property. So I sent that, and basically from there, they took some photos of the property. They did an inspection, and they didn't like what they saw. So I was actually repairing the outside wood on the property, which is something that I've been meaning to do because after a while the wood gets brittle, it gets rotten because it rains there and it's humid. So like I was repairing it, so they took photos of that, and the underwriter didn't like that, right? They said, "Oh, it's too risky. We don't want to land this property." But even though I said, "Hey, I'm literally fixing it right now," they have photos of the contractor fixing it right now, and at the end of the month, it should be done and repainted, right? So I was pretty disappointed, like saying, well, like at the 11th hour, they just declined the deal, and they did ask, like, due to the age of the property, due to the exterior wood, which I'm fixing, they felt like it was too risky, right? So I left the sour taste in their mouth, and I left the sour taste in my mouth. So I just asked, say, hey, like, it's gonna be fixed by end of this month. If it's done, could you reconsider, right? Like, insuring this property because I want to save 21,000, right? So I'll be done in a month. So I'm locked into Travelers. I'm have to pay for a month, but when you cancel your insurance, typically they'll prorate you the money, right? So I pay Travelers on a monthly basis. So let's just say it's $3,000 a month because I have to pay over 10 months. Um, and I use it for half a month. Then if I cancel it, I pay $1,500. I'll get reimbursed $1,500 unless they charge a cancellation fee, which they may. So I'll pay that cancellation fee, whatever that looks like. But it's worth it if I'm getting $21,000 a year in savings, right? So I'm hopeful that they're doing that. But I'm reaching out to other insurance companies as well. He is a broker. I just said, well, who would finance or who would insure this property, right? And I'm looking to save money. If not, I'm stuck, right, with this $30,000 insurance. So $21,000 more, but hey, it's the cost of doing business, unfortunately, right? So this is why, unfortunately, when you own real estate, you have to constantly raise rents because insurance went up by $5,000 a year, right? So if you divide that by 12, I can't even do that math, right? And then you divide it by 26 doors, divide that by 12, and that's how much you have to raise your rents just to cover the cost of insurance, right? And to keep your net operating income the same, unfortunately. So, just trying to do that. And, for some reason, the insurance underwriter thought my property was a Section 8 property. I'm like, no, like, it's not Section 8. I rent out to two tenants who are Section 8, and we typically keep long term leases. So they just felt like they had a very negative view of the property. I mean, it is near like behind a Holiday Inn. It's not the greatest like look, but like we treat the property well. We have great management and we renovate the inside. Like that's the reason why it's, most of the units are rented out, right? So I was a little disappointed they didn't want to take that risk. They're a local company, and I was literally in the process of fixing it. So I reached out to my property manager and said, "Hey, do you know any insurance people that would insure this?" And he's like, "Well, it's gonna be challenging because the age of the property." So I'm not giving up, right? Like obviously, I want to save about $21,000, and want to do the best, right? Like if I have to repair the property, so be it. But I'd rather spend the money fixing the property versus paying for insurance, right? So if they want me to fix the roof, if they want me to do this, like I could do it with the insurance. So we'll keep you guys posted. But that's what I was told today. Super bummer. I was hoping to save $21,000. I was hoping to raise the value of the asset by 210K, and obviously that can increase my cash flow by about 2,000 bucks a month, right? Which is pretty significant, right? To increase your cash flow by 2,000 bucks a month, that covers my loan. That can help me cover some expenses. So I'm still not giving up. Like you can always change your insurance anytime. Like I'm still getting quotes for my 20 unit. If I can save significant amounts of money, like I think 21,000 is pretty significant. Like if an ACV policy was like maybe $5,000 less, it's not worth it. I'd rather just pay $5,000 more, get that better insurance, and not have to deal with it switching carriers. So, pretty interesting in terms of that aspect, right? And that's the downside of C-class apartments. Being transparent, right? That's why I see a lot of people move out of C-class, or they increase the value and they sell it because insurance, you're at the mercy, right? Like it's more risk due to the age. And if you're like in the Midwest where there's wind and hail, they're going to charge you more premiums because they want to mitigate their risk, right? So now I see why people go from C class apartments, they trip to B class, and they eventually go to A class, right? I may be in that trajectory. We'll see, right? Obviously, I don't, or am I going to 1031 exchange my apartment into like a bunch of new construction single family homes, right? Like, I don't know. So that's why in real estate, you always have to be willing to pivot, right? Like, I thought I was a buy and hold investor, but if insurance keeps on going up and up and up and doesn't make sense, then maybe I'll 1031 exchange and buy a bunch of new build single family homes because insurance is so much cheaper on like single family homes, right? Like imagine a single family home, I pay like maybe 2,000 bucks a year for a property that's worth like $2 million, right? Versus an apartment complex, it's worth about 1.6. I mean, it gets a lot more income, it's more risk, but the insurance is like 30,000, right? But this thing grosses 18K a month, right? So I have a bit more income, but my expenses are higher, right? I can 1031 exchange that, buy like literally, if I sell it for $1.6 million, let's just say, and let's just say my loan is 400,000 at 1.2. Um, you know, uh, if I do 1031, it'll defer a lot of taxes. But at that point, I just could literally buy like, let's just say I get $1.2 million. I could buy like literally, what is that, $300,000 new construction in Huntsville, Alabama for 300K. I could buy four of those cash if I wanted to, right? Like just straight up cash, or I can leverage a little bit if I want to. But I could buy these cash, own four free and clear that rent for 2,000 bucks each, and they're brand new. Don't deal with the expenses as much, right? So this is the thing of real estate, right? Like you cannot get too attached to your properties. You have to make moves that make sense based on the situation, right? So like, or I could, instead of buying like, basically four cash, I could maybe buy like eight with 50% down payments on each, right? So I'm putting 150K each, right? So that way, your cash flow is a little bit better and interest rates are higher, so it makes sense. So, it's interesting to see. I'll continue to monitor, but I see why a lot of apartment investors go from C class, start in C class, make money, trip to B class, and go to A class, right? It's a natural progression, and maybe I'm going through that progression, right? Because there's a lot of capex associated with C class, and I've made most of my money, most of my equity by doing the value add strategy, right? Like renovating it, raising the rents. I bought it for all in for 800. I doubled the value to 800, and then I take that money and then trade up, right? So we'll see what I do, right? And maybe the insurance will change your mind, right? And this will be okay. So just sharing my experience. If you're looking to buy your first multifamily deal with guidance, check out my link below. Consider joining the mentorship program. Let me know if any comments or questions below. Love to hear your comments. Love to answer your questions. And please like, comment, subscribe, and share this video with somebody who can find value from this. Thank you so much.